to EQUITY.GURU. This is my quarterly video series where I ask the hard questions of pubco CEOs, etc. Today, we're talking to West High Yield. The ticker symbol is WHY, which I quite enjoy as a ticker symbol, to be honest. Gives you lots of WHY options. Today, we're talking to Barry Baim and Frank Marasco from West High Yield. And to start things off, one of the things that really sort of jumped out about me about this company when we're doing our research for it is I like to go back to the beginning of time on the stock chart and see how things have gone, over 2 years, 3 years, 5 years. You guys got like 17 years of history here where this thing hasn't tanked out. Nobody's lost their life savings. And it looks like maybe this is where the rubber hits the road.
This is where the rubber hits the road right now. We're right at permit stage. We talked with our people yesterday, and they said we'll be paying for our permits within the next 3 to 4 weeks. Then we go into the review, and we just wait for our permits to be released. And we've completed the permit process in British Columbia, the hardest jurisdiction on earth. Boy, they put you through it, I'll tell you.
Getting a permit in British Columbia is like me getting my kids on a weekend when they're not scheduled to be with me. That's
oh yeah, it's no easy task. You got to have a lot of perseverance, patience, and a lot of money.
Yeah,
and it works, right? But we have the goods, right? That's the good thing. And like you said, we've never given up. I have a big responsibility to all my shareholders. We've been public over 16 years now, 16 and a half years. I haven't sold one single share because it's about us all equally together. And when this all happens, we're going to make money together all at the same time. And this is strategic and critical to North America, this product, and it's about to hit the rubber, like you said, and it's about to take off. In our opinion, this thing is fantastic position that we're in right now.
So give me your superhero origin story, because I know you didn't start out with a magnesium mine. You're doing other things in life. Like, where did you come from before West High Yield?
Well, I actually was retired. I came out of retirement. But prior to that, I had 47 different businesses, no failures, all successful, every bill, every creditor, and every mortgage paid on time. So that wasn't an easy task. So 47 different businesses, but we kept about 16 businesses at a time. We had approximately 400 staff, and it was a lot of work. It was 16 hours a day, 6.5 days a week for 33 straight years. So, and this, I thought that was tough until I got into this game. At least we had cash flow and you work within your parameters.
Right.
And, we had hotels. We had 5 hotels, 4 motels, 11 liquor stores, 5 nightclubs, pubs, restaurants, outdoor strip malls, every business on earth, 850 rentals, RV parks, mobile home parks, apartment blocks. And it was a grind. It was tough. I had $31 million in mortgages. Went through the 80s with 23% interest, never missed a mortgage payment, 1 more percent, 24, we couldn't have made it. 23%. Try that on $15 million. And I want everybody to work out those numbers, because at 3%, your mortgage payments a month are $37,500 per month, principal and interest. 23% was $287,000 per month. It was a grind, but we made every payment. But we lost a bunch of equity, and we went through it. We kept our heads down, and I sold everything off at 47. We started off at $0, and we got up to 85 million a year cash flow, and sold everything off and paid off all our debts and retired and said, thank you, God. Thank you, Canada. 6 months later, I was just trembling to go back to work.
Yeah. Well, so now you're at the 17-year stage for West High Yield. You've never lost the faith. You've been buying along the way. And you could draw a straight line across those 17 years. The average share price is almost unmoved. And not because of a lack of liquidity. If anything, liquidity in the last year and a half has been really up there. It seems like it's just steadiness of the operation.
Well, absolutely. But it's the most undervalued stock probably in the world, based on, if you compare dollar equivalents to what we found in magnesium alone, then you got to include the silica, the nickel, and the iron. Those are all credits. First of all, we use 90%. So we have no waste. Dollar equivalents is 10.6 million tons contained of magnesium. Convert that into ingots. That's over $60 billion. That's the equivalent of 30 million ounces to 35 million ounces dollar equivalents of gold. And we're getting nothing for it. And it's about to go into the biggest boom that you'll ever see in the electric vehicle and decarbonization of the world. Strategic and critical mineral magnesium. China controls 86% of it. Russia controls 10% of it. And the West is moving away from China, so they're trying to set up their own strategic reserves in North America. And we're just going to be part of that puzzle. And they have to come to us because we're 2 miles north of the US border. We're right at permit stage. Anybody that comes into the game looking for magnesium today, that's a 10 to 15 year cycle they got to go through. They got to go through what we went through. So, and Barry can add to that. Barry, go ahead.
Well, I'm just going to say, I mean, the World Bank's already stated that in order to achieve this net zero by 2050 transition, it's going to require 3 billion tons of critical industrial minerals and metals to achieve that. So not only based on what the capacity is currently in the world, but the growing demand, there's going to continue to be that gap going forward. And with the geopolitical froth of China, Russia, where they're weaponizing resources and using them as either carrot or a stick, there's a huge desire by all of the major nations, the G7 nations, as well as Europe, onshore North America, to find their own resources. And part of it, I guess, Western society became a bit lazy and looked at the cost, but now there's so many other factors involved, and many manufacturers have seen the impact of not having availability of input products. The German auto industry got shut down last October, November, December, due to China not shipping the magnesium. The light bulb went on and said, okay, well, we're not going to be able to produce anything. So there's a mind to market mentality now going on with manufacturers. Governments, the US government, the Canadian government, the European Union, have all got mandates in place to provide funding and accelerate the development of critical minerals within their own countries or friendly countries, onshore partners, friendshore partners, as they're calling them. So, yeah, I mean, we're at an inflection point here where we couldn't be better suited to be located where we are, onshore North America, with one of the key critical metals and minerals that are needed in this whole transition.
So I think what's really interesting about your company, like I've seen magnesium deals before, and they're usually at the point of we've flown a helicopter over and took some pictures. You're not only advanced enough that you're at the permitting stage, but you've got a robust PEA attached to it. And what I really like about your corporate presentation is it doesn't end at one day we'll have a lot of ore. It moves beyond that into the use case for the magnesium and what you can turn it into that can further increase your margin. If you could talk to that a little bit, Frank, like in a minute or less, like what is the once we've mined it perspective on West High Yield?
Once we've mined it, you can convert our product into, which is used in 6 different industries. So we start off at pharmaceutical grade, which commands the high price. It also produces a magnesium battery that's 10 times cheaper and 12 times longer lasting than lithium. And that's on the cusp of commercialization of a solid state battery. Not quite there yet, about another year or two. It also produces the lightest and strongest metal based on weight to density ratio. So it's 75% lighter than steel, 60% lighter than titanium, 33% lighter than aluminum. So can you imagine 33% lighter than aluminum? So where are they going to put those battery packs or lighten up the cars or the aero industry?
The batteries are where the weight is in a Tesla, right? They're massive.
They're massive. The weight is, so we can create the frame from that out of magnesium, plus produce a magnesium battery. That's just fantastic for the industry. And another thing that I wanted to mention, the magnesium, we're already at 0 CO2 emissions today. So we're already 28 years ahead of that net zero by 2050. We're already there. So that's very important to point out too to the public. So yeah, we welcome everybody to join in and support West High Yield Resources because we believe it's a good investment because we have the goods already. Like you said, we got a preliminary economic assessment, But in the next day or two, we should be completing our pre-feasibility study, and that's going to be announced publicly in short order here. So keep your eyes open for that. It also, getting back to what it produces, it also produces a fertilizer. That's very important. As you can see, they're cutting back chemical fertilizers for the farmers right now. Well, this is a natural fertilizer that can add the minerals and nutrients back into the ground. Magnesium is one of the most important minerals and nutrients for humanity, just to survive. So these are all positive things. It also makes a magnesium wallboard that's fireproof, smoke-proof, waterproof, mold, mildew, and termite-proof. Talk about deforestation. We're reducing, cutting down trees. So this is a very green project. So anybody that's an environmentalist, like we are environmentalists, that's why we're using and went after the magnesium, because it doesn't matter where you go. Everybody complains about being green. No, not in my backyard. But look at what they're driving. Look at what they're holding on. And, they're talking in a phone every single day. Well, everything comes from the ground. They have to embrace this mind. They have to embrace natural resources, because that's what's needed for us to get through life. If we shut down all the mining companies in the world, you've just shut down the world. We're going to go back to caveman days.
So I like that there's an aspect of your business that isn't just we're going to sell it to somebody else and then they can do with it what they want. You want to own the entire chain from soup to nuts, which I think is ambitious. Can you do that without having to raise billions of dollars?
Barry, go ahead, take this.
Well, I mean, the opportunity is there to vertically integrate, at least starting off with magnesium oxide and magnesium hydroxide. Those are two of the key starting points. And from there, we can sell into many verticals. But what we want to do with that then is move forward and produce metal ingots. We've signed an MOU with a company out of the United States, Big Blue Technologies, and they have developed a process that is way more effective, cost-effective, environmentally friendly than the current methods, the pigeon process that's used to create magnesium metal in China. So, the whole need for us is not only to create a mine to develop the ore, but Canada as a country historically has exported their natural resources and not taken advantage of the value add that they can create by getting into these other products. We've had some great conversations already with clusters and consortiums that want to form within Canada that have synergies of like-minded minerals that are complementary to build a battery in Canada, to start alloying and die casting lightweight materials in Canada, to actually produce a finished product using these minerals in Canada. And that's what excites us, because there's long-term economic stability. We are contributing to the whole greening of the globe by 2050. And we're adding a lot of value back into the not only Canadian economy, BC economy, but in our particular case, where we'll be mining it in that Roslyn area.
So talk to me, if you could, about the gold aspect of what you're sitting on, because magnesium's great and magnesium end products even better, but to have a little gold hedge in there doesn't suck.
Barry?
Well, I agree. I mean, we're in the old Roslyn gold camp. I mean, historically, there was millions of ounces taken off that property in the late 1800s and early 1900s. Frank has often said, based on some of the old timers in the area, that Spokane, Washington was built on that because of the floating border at the time. So they don't have accurate records, but they know there was over at least 3 million ounces taken off of that property. There was some at some point, and we've got some independent information on that from old mining journals, that the mining inspectors were amazed because they said at some points there was up to 1,600 ounces per ton of gold that came out of some of those veins in that area. Nice. So we're excited about it because, I mean, a lot of the workings and work that was undertaken was with old technology and manual labor. So we've gone back in and built on a drilling program that Frank first initiated with the company at the onset. And I've drilled over 41 holes this past summer. We've got, I think it's over 1,400 samples waiting assaying. Unfortunately, that's a little backed up. But we've had some early results with strong indications, up to 1,400 grams over what 0.3 of a meter. So, you know, that's a lot of ounces per ton when you start factoring that out. And you know, it was funny because we didn't really get a lot of recognition from that. But we're keeping our nose to the grindstone, and we have more information to share, and we're excited about the program.
Yeah.
One of the nice points of what you guys put together is the PEA that you're sitting on right now. I think what's really interesting to me is how conservative you've gone with the numbers that you plugged into that.
Very, very conservative. And since we've completed that PEA, we've done optimization. In the PEA, it says after processing, you'd have a 60% recovery rate. We now have a 94.87% recovery rate. So that's a 50% increase.
Wow.
So inside the PEA, it says we contain 10.6 million tons PEA at 60% recovery. Now, that's a 50% increase. That would add another approximately 5 to 6 million more tons to the bottom line of contained magnesium oxide. So you're talking 16, 17 million tons of contained magnesium. Multiply that by $6,000 a ton now and see what that comes to. You're talking over $90 billion US if that's converted into ingots, because ingots are selling for between $6,000 and $11,000 per ton, depending on your customer.
Okay.
So we always take the lowest numbers. We're very conservative at everything we do. We under-promise and overproduce, and that's the way we like to move.
It's almost like House Street is not quite your level. You're actually doing the work over a long period, making promises that you can deliver on, not taking the chance to overhype things or even just take like the best guess. By using the numbers that you're using, like we've got some people on staff that look at technical numbers all day long, and we just did a discussion yesterday, and everyone was looking at like these numbers, they're not even right. Like they're so conservative as to almost be you know, incorrect, but to the downside, right? So you're only going to be benefiting out when the actual real numbers plug in.
Exactly right.
It's a nice way of doing things, I think.
Yeah, it's good to be conservative. We don't want to promote. We want to come up with just the facts and science only. And we've used third party all the way through. We don't do any of that work. We have to hire third party PhD and all these scientists and engineers to come up with this information. So it's a long, arduous process to get that information, and very, very costly to get there too. So this is good. And look at our share structure. That's very important to point out. We only got just under 82 million shares without zero rollbacks.
Right.
Anybody else at our capacity at permit stages, 300 million to 800 million shares
And a couple
inside
of
their
for
flow.
the last 3 or 5 years.
Yeah, absolutely. Think about that. How we're saving the dilution to help shareholders increase their value. So if somebody knocks on our door and takes us out, they're going to get a big return versus a very small return. And that's very important to point out.
Let me circle in on some points on your share chart, if I can, because charts always look very different depending on your timeline. All right, if you're looking over 17 years, you guys are immaculate. If you're looking over 2 years, you know, your share price is up from where it would have been 2 years ago. But you did have a big blip in late 2021. Talk to us about what drove your share price right there and what it left you looking like in the subsequently.
Well, I'll let Barry finish that because he mentioned part of it earlier. Go ahead, Barry.
So what drove that particular blip up in a very short period of time was the geopolitical issue with China and Germany specifically. It brought to the forefront this whole concern about the availability of critical minerals and the accessibility of critical minerals. And in that specific instance, and was so newsworthy in Europe and got play over here, is that magnesium shortage. And what it did is it created a lot of hype on anyone looking and saying, I'm going to invest in a magnesium stock. So we've got a lot of people that, you know, gravitated towards our particular company as other magnesium stocks as well that went up in that time frame. Now, subsequent to that, I mean, things normalized a little bit. China started shipping, and then it came, you know, we impacted our share.
You're pulling things out of the ground.
But the important thing to understand here is nothing's changed. If anything, our project has become more robust and enhanced through the optimization of, as Frank says, our forthcoming pre-feasibility study, and what we've able to achieve from an extraction standpoint through our proprietary process. We're using a process to extract that's got a low technological risk because the majority of it has been used elsewhere on like ore. But what we've done is added a component to it, which is the leaching process on a closed loop system that allows us to be environmentally friendly, have that net CO2 emissions from that process, recapture the asset and reuse it to give us a product that meets many of the ESG standards of today. Because not only is the product that you produce important, it's how it's produced. What's the pedigree of your product?
Right.
More and more manufacturers are looking specifically is what is the CO2 trail for my input products into my finished goods? And the European Union has said we need to have more green products, green produced products. And China, full marks to them, they produce a lot of minerals and metals, but they use, at least in the magnesium segment specifically, a pigeon process, which is highly heat and CO2 intensive. It expends a lot of CO2. So when you look at Y Resources, we've talked about all the inherent value. We've got a well-defined and delineated resource. We've got very, what I would say, conservative, but very robust economic numbers that support this mine. We have the infrastructure in place around us that we're not building a mine in the middle of nowhere and we have to have camps brought in or roads built or power. We have power, water, highways. We're in a mining friendly jurisdiction with trail and tech not far down the road, and mining is part of the history of that. We are extracting a metal that is critical to the net zero transition by 2050. We utilize over 90%, up to 94 to 96% of our ore. If you're a gold mine, you take the ounce of ore out, what do you got to do with the rest? It becomes waste rock and you got to figure it out. We are creating saleable products and using that ore. So it's very, very green in that respect.
Are you like in terms of carbon credits? Like, is that something that allows you to potentially make revenue going forward?
Yes, there will be an opportunity. We've just got to figure out the exact credit then. And I mean, that's another ancillary revenue stream for us potentially, and or offset to use with some other company. So we're excited because this is a required mineral, and because of all of the green aspects of the project, the extraction process, we're using all of the ore and creating saleable items that are critical to, again, advancing other products in this area. And we're onshore North America with a customer that has a voracious appetite, 2 miles south of us, because we're just 2 miles north of the Washington state border.
Sure.
If you've Go ahead.
An aspect of your company, and I think there's always at least one. Is there a dark horse of the apocalypse risk factor relating to your property or to your company? Like, do you need to go out and raise a bunch of money? Is there anything that can get in your way at this point?
Well, I mean, we do need to raise more money to advance the project. That's part of mining. But we're confident that won't be an issue based on what we have and the need in the marketplace. We don't have a risk from extraction. We're at surface. We have little to no overburden. We have infrastructure around us. So that isn't an issue about having to raise funds to build. We'll need a bit of OpEx in order to build out roads and the mine site. But, sort of our pathway to cash flow is we've already got an LOI in place with a company called Galaxy that has agreed to buy at least the first 2 years of production of ore, just ore alone, which will provide us over $100 million plus a year in net cash. So that all of a sudden gives us a lot of latitude, a lot of flexibility with how we're going to debt finance the rest of the project.
For sure.
So we've got that. We've had a number of conversations with interested parties who are looking to either collaborate and or are interested in offtake agreements. This is, again, so critical around the world, and because of China and Russia's control, not only North America, but all over the world is looking for a source. And that's the other thing. We're in we're in a relatively good geopolitically stable country that
Yep.
can offer a secure supply chain.
No
I mean,
AK-47s in sight.
yeah,
Yeah, and sustainable. It's quite
Yeah.
sustainable, the project, right? It's
Sustainable, and like, you know, your part of it is going to go towards food production and building, and like it's I think that the younger generation is a lot more amenable to mining as long as it's done in a certain way, right? Not the old, like, let's go to the Amazon and burn it all down, but
no.
what's it going to be used for? How's it going to get us closer to a sustainable future? Are we going to get it out of the ground in a way that doesn't leave the landscape looking like, you know, some parts of Ontario? You know, can we make mining something that's actually beneficial to all? And I think this project seems to fit within that category.
Absolutely correct. It's the greenest, friendliest mineral on earth to mine. Because, and not all serpentines are the same. This is a serpentine that just checks off all the boxes. It's just amazing that we can say that, because we know other people that have other products and they have carbon in it, and we don't have any carbon whatsoever. So when we separate it, there's no CO2 emissions. When we're producing a ton of magnesium oxide, there's no CO2 emissions. So those are the positive aspects of it. It's totally green, sustainable. We've already proved up 43 years of it. But what's behind it is really neat too. It's a one rock unit, it's called in the mining industry. And that one rock unit is 7.5 square kilometers in size. That's approximately 3 sections of land or 3 square miles, one single rock. So there's no dirt. So when you're moving this rock, it's just solid rock. So no dirt whatsoever, which is really nice to handle. So the reclamation is really simple. You're just shaving rock off. And it starts off as rock. It's an outcrop. It starts right at surface. So the costs are very, very low, $30 to $50 a ton to mine it. And then you ship it and you process it. Our costs are only approximately $400 a ton to get 1 ton of magnesium oxide. That's producing 0 CO2 emissions. So it's a fantastic project.
To get you to a place where you can be pulling it effectively out of the ground. I'm guessing, since you don't need to build a giant structure in advance, you can basically just follow the rock where it goes, that it's a little bit easier for you to get to that production point.
Oh, it's instant. Absolutely. We're going to be building some plants, and we want to build them in Canada, and we're looking at the trail area because it's already zoned industrial, but this is light industrial in a sense, because, you know, there's no CO2 emissions. Heavy industrial, you got lots of CO2 emissions. We have none already. So it's good for the community. It's good for the country, and it's a secure product for North America. It's strategic and critical to North America. Security. So how can you not embrace something like that when we need protection? We got to protect our country. We've got to protect ourselves. We got to use the products that get us through life. This stuff produces from, you know, food grade pharmaceutical products to construction, to cement, to fertilizer, to metal ingots. We use those things every day. That's why the community has to embrace it, because they're making the world a better place. Instead of complaining about other countries making a mess of it, here, we'll show you how to do it and do it properly. Follow our steps. Mine this. This is the product to mine that touches every industry. And we're going to make this world a better place.
So right now, as I understand it, your market cap is sitting at around 18 million, which for 17 years of stability and growth.
I've spent over $40 million, and we've produced over approximately, it depends how you look at it. You can go as low as, let's be really conservative, $50 billion to $100 billion. We have facts and science to back that. Is that all it's worth? Is 25 cents a share? That's a joke. When we finished our PEA, and the rule of thumb is when you get a preliminary economic assessment, at that time we had approximately 46 million shares, and we had an evaluation of 1.3 billion. And this isn't the exact number, but it's a rule of thumb that they use. They took 1.3 billion divided by 46 million. That was $30 a share. That's what we should have been evaluated at. But the whole market is snubbing us. For some reason, we don't get it. I mean,
the other side of that 18 years of stability is maybe there's a 19th year, right? Like, is the opportunity right now is going to be the question in a lot of people's minds, or, will it still be the same or even cheaper in 3 months' time?
The opportunity is now. I don't think it's going to get much cheaper. It's pretty cheap right now. We've spent over $40 million and it's saying we're worth 18 million. Come on. Doesn't make sense, does it?
If it goes cheaper, are you buying still?
I can't. I'd love to buy as much as I can. I just have too much knowledge. Otherwise, I'd be buying it all day long. This would be the only stock I'd be buying. We're right at permit stage, you guys. You got to remember, less than 1 in 10,000 make it to permit stage. Think about that statement. That's so there's one. The next 10,000 won't make it.
The other key thing is that for anyone coming into this space and wanting to develop a critical mineral mine, the average time, and this is an independent source, has stated it's 13 years in British Columbia. So if you're starting today, you can expect it to take 10 to 15 years to get a mine into production.
Well, and you got to hope that you've got the right party in government to get your permits at half the time, right?
We love the Liberal attitude. They picked a product that wants to be green and sustainable. You can't find a greener or more sustainable project than ours in Canada. Cannot.
Indeed. I think I'm always looking for a company that's down on its luck, but has fixed things and is moving on the way up. I don't often find companies that are absolutely doing exactly what they promised. Everything's being laid out. Everything's moving along. And this share price is still in that zone of like usually protected for guys that are, being confronted by shareholders with torches and pitchforks. You're kind of like, I hate to say it, but you're kind of like the perfect storm for an investor. You get it cheap right before it starts to really show its wings.
Exactly right, Chris. You're absolutely correct.
So
this is about to take off.
What do we look at for the next 3 months, 6 months, 9 months to know that Frank is waking up in the morning with a big fat smile on his face?
Price of the stock, are you talking about?
I'm talking about progress at the.
Well, we're going to be paying for our permits. And then once you pay for your permit, you go into that review. And then within 60 to 90 days, you're permitted. And then we got to just raise funds that, like Barry said, we got to build a road from, like we have full infrastructure in place already. Don't kid yourself. We have commercial roads. We have the electricity, the natural gas, the water, all in place right now. But off the commercial highway, we've got to build a road up the side of that mountain. That's between $4 and $6 million to build a road to the top. And then once we built that road, because you got to build it really secure and safe because these big trucks have to get by each other, then we start cash flowing. We start selling our rock, and it's only $30 a ton to mine. So
that's a pretty small amount of money to get to that point.
Pretty small. Yeah, absolutely, to get to cash flow. And let's say we didn't get to cash flow at that point and we haven't sold anything, then we got to build a plant. And that plant, you're looking at around $250 to $300 million for that plant. And that takes about 2 to 3 years to erect. And the reason why I say that, we want to build a semi-commercial plant first and spend that, 10 to 15 to $20 million. That will give us the feasibility study for the main plant, so there's no mistakes. So you get the right engineers on it. You want to build a semi-commercial plant. You operate it for minimum 6 months. So it takes all the bugs out, get the engineers on it, and then that will erect. And that eliminates all risk, is what we're trying to do before you spend $300 million.
Right. Okay.
It's a good strategy.
It's, you're definitely putting the cart behind the horse. There's no cutting corners. There's no jumping forward. There's no, it'll look good on the share chart if we do this. You've just, clearly you want to get an operating mine in place and you've done the work to get it. So, commendations to you guys for that.
Thank you.
If you could do it all over again, would you have done it the same way?
Good question. I would do it methodically and conservatively, but I know the road now. I know how to do it a lot sooner. If we were private, I could probably do it in 6, 7 years. Public, I could probably get it done in 10 years versus the 15. Remember 2007 and 2008, we had the monetary collapse. Right. And then 20 and 21, we had COVID. That set us back 4 years. Otherwise, we would have been done around that 11-year mark. Mm-hmm. But being public, it's very difficult because there's rules and regulations before you can move forward. You have to get technical reports, NI 43-101 reports, then you have to pass it. And then once you pass that, you can get your next report, which is your preliminary economic assessment report. That's your cutoff report. If you don't pass that, you're automatically shut down by law, and you got to go find another project and start working on that. But we've passed everything with flying colors. Yeah, no, it's perfect position. Now we're finished. We finished our baseline study, our environmental assessment study. We're finishing off our pre-feasibility study, which is the economics, updated economics, and the blueprints for the semi-commercial plant and partial blueprints for the main plant. And those are the steps that you have to take. And that's why it takes so long. It's not me. I would have done what we knew back in 2007 and 8 is no different in the information that we know today, except I had to go through that stage by stage protocol that's designed by the exchange and the provincial government. It's arduous and hard to do that. Trust me.
Once you're through it, once you're through, you can go to the market anytime and get that money.
Absolutely right. And we're very excited to bring a wonderful project, world-class project to the world. And of course, the shareholders, nothing but benefits for all of them. We're not giving up. We're moving forward like space shuttle chart in short form.
So there's two metrics that I like to use in terms of measuring infrastructure possibilities on a mining project. One is how many Tim Hortons are within 100 kilometers.
Yeah,
and two is how long it takes the workers to get to the nearest bar.
Well, we're close to Roslyn. We're only 10 to 15 kilometers away from Roslyn. So all the workers are going to be working on our site, and then they get to drive home at night or go in town for lunch or go to all the Tim Hortons that are around and donut shops that are around. It's very simple and easy to get to and home,
So it's a multi-Tim Hortons project. That's a good sign.
It's wonderful. Yeah. We're very excited. Well, thank you so much, Chris, for doing this for us.
You know what? A pleasure to talking to you guys. There's such a wide variety of guys in mining in Canada, from the former brokers to the guys that cling off the side of the mountain. But there's not a lot of guys that just do the work, get the paperwork, try and keep everything within a nice, easy deliverable, and can move this thing along in multiple decades like you guys have. Like, a lot of credit to you for, one, for sticking it out, and two, for having a presentation where it's clear that you have done not just the work you need to do, but the work that it'd be nice to have, and the work that you won't need for another 5 years.
Right on. Thank you for that.
Yeah, I think that we have a very loyal, long-term shareholder voice or base that believes in this project. They see this inflection point we're at, and as Frank said, our objective is to create this long-term value for our shareholders within our long time, and that's probably part of the liquidity problem you spoke to earlier, is that so many people are holding tight because they see the current market conditions change, the geopolitical conditions have changed, and how we're at this inflection point where all of this critical mineral information and demand is happening now, and we're at a confluence of opportunity right now as a company.
Yeah, we expect this project and this product, it's just the start of the boom. They're talking a CAGR of 6, but when you're talking the products of the ingots, you're looking at that 10 to 15% per year CAGR. So that's telling you there's going to be a big demand and a big boom for the next 10 to 15 to 20 years, and if not longer, for this product. So it's good for everybody.
Well, you got me convinced. I'm rushing out and buying some right now.
God bless.
Thanks, guys. Pleasure to talk to you, and we'll talk again in the near future.
Yeah, thank you very much.
Look forward to it, Chris. Thank you.